Good evening, members. First of all, I welcome you all in this very important webinar from the series on Tax Audit Practice Session 2, Standard on Auditing Consideration in Tax Audit. Today, we are going to discuss the importance of standards on auditing and tax audit, and we are very honored to have with us CA Kusai Goawala ji as a speaker. I welcome you, sir. I also welcome CA Chandrasekhar Chitale, sir, Vice Chairman of TQRB and my Chairman in Direct Tax Committee last year. Welcome, Chitale, sir. As you all are aware, tax audit plays a vital role in ensuring compliance with tax laws and regulation. They help identify and discrepancies or error in the financial statement and tax return on businesses, thereby promoting transparency and fairness in the tax system. The standard of auditing provides guidelines for auditors to plan and perform their work effectively. They cover various aspects of the audit, including the auditor's independence, professional competence, and due care. It is important to note that tax audit and financial statement audit are distinct processes. Tax audit focus on various compliances with tax laws, while financial statement audits focus on providing independent opinion on the fairness of the financial statements. However, some of the principle and procedure outlined in the standard on auditing may also be relevant to tax audits, particularly when it comes to obtaining and evaluating audit evidence. I am confident that today's webinar will be a valuable addition to our professional knowledge. I am pleased to announce that we have the privilege of hosting CA Kusai Goawala as our esteemed speaker for this session. I extend my warm welcome to CA Kusai Goawala and express my gratitude for their willingness to share their expertise with us. Without further delay, I kindly request CA Kusai Goawala to take over the session and enlighten us with their insight on the importance of standards on auditing and tax audit. But before that, I will request Secretary TAQRB CA Anita Suneja ji to please brief the profile of our today's speaker. Anita ji, over to you.
Thank you very much, sir, and thank you for your opening remarks, sir. I welcome, sir, our speaker for this session, CA Kusai Goawala ji, who is a fellow member of the Institute of Chartered Accountants. He has more than 36 years of experience in accounting. He has been a part of the group which authored the guidance note on internal audit of automobile industry, which was published by ICI. He has been part of various groups in various publications of ICI. He has been also nominated on Ind AS committee of WIRC for the year 21-22. I request Sir Chitale sir is also here, sir, a Vice Chairman for TAQRB, sir, to take over for further proceedings.
Well, thank you. Friends, it is indeed a pleasure to have a dialogue with you at this particular series in respect of tax audit. What is expected is, in respect of many firms, or almost each firm in India, tax audit is one of the major assignments that the firms are discharging. So at department also, it was noticed that these errors need serious consideration. So the department has communicated certain errors which have crept in tax audit report to the institute. And they also expect that institute to take cognizance of those errors. And therefore, the institute has constituted Taxation Audit Quality Review Board. As far as the TAQRB is concerned, the errors and omissions which are noticed in the tax audit report are discussed, they are deliberated, and depending upon seriousness of that error, appropriate action is expected to be initiated by TAQRB. In this year, the council year 23-24, CA Dr. Raj Chawla is heading this Taxation Audit Quality Review Board, and he takes very keen interest in the functioning of the board. This particular series has also originated from his thought process that on individual aspects relating to tax audit, we should enlighten the various members so that whatever tax audits that emerge, those will be error-free. So it's not that we are taking one session entirely devoted to the tax audit report, say 3CD or etc. We are slicing out various aspects of tax audit and then arranging full session on this particular topic. So today we are having the session on auditing aspects in tax audit, because it is observed that in number of cases, certain standards of auditing are not followed, certain documentations are not there. I was also sitting as a member of disciplinary committee for earlier years, and it was noticed that chartered accountants at times are not able to substantiate their case because they lack in providing the appropriate documents. And as you know that before court or disciplinary committee, it is the documents that talk. Whatever human beings talk is of limited relevance. And therefore, Dr. Raj Chawla suggested that we should have this particular session only devoted to the auditing standards relating to tax audit. And CA Kusai Goawala, who is an eminent chartered accountant, he has delivered hundreds of lectures, and particularly tax audit and standards on auditing is his favorite subject. And therefore, we requested Kusai Goawala to deliver lecture on this particular topic. And I'm sure that whatever insights he has received during his tenure or curriculum as a chartered accountant, as a lecturer, and whatever errors or whatever issues that have been raised at various seminars, all will culminate in this power pack session on standards on auditing and tax audit. So over to you, Kusai, for the purpose of deliberations. And friends, if you have any queries, you may post those queries in chat box as far as today's session is concerned. And if you have any queries besides today's session, you may also send them on chat box or mail them to us at taqrb@ici.in, so that in subsequent sessions, we will take cognizance of the queries on other topics. As far as queries relating to standards of auditing and tax audit is concerned, we have very able speaker in the form of Kusai. So he would be able to do justice to your queries on the topic. Thank you. And over to you, Kusai.
The chairman of TAQRB, Dr. Raj Chawla ji, the vice chairman, Chikle sir, Anita ji, thank you very much for inviting me for this particular session. My professional colleagues, a very good evening to all of you. Let me first share my screen so that we can see the PPT which I propose to present. Is the PPT visible?
Yes, yeah, it is visible.
Okay, fine. Today we are going to discuss standards on auditing in relation particularly to the tax audit aspect, which is a very important now the process which we are following, basically looking at the October deadline. And let me recall my 36 years of my experience as a chartered accountant, as a practicing chartered accountant. Initially, when this tax audit was introduced, it was a very simple questionnaire, and people had no difficulty in answering those tax audit questions. And it was very easy. But over a period, the department also and the government also realized the importance of this tax audit, because that enabled the assessing officer to determine the taxable income of the assessee and even the disallowances which is required under the Income Tax Act. So a lot of responsibility and the duty has been casted on the tax auditor to highlight and point out those issues which are relevant for the assessing officer, for him to complete the assessment for the particular assessee. Now the responsibility is very onerous. We are all aware that that clause number 34A, which is talking about the TDS compliance, which is one of the most complex of the entire tax audit format, where you have to go into each and every transaction to find out whether the company has or whether assessee has deducted tax on each and every applicable areas and reconcile with the profit and loss account or even the advances given. So the TDS provision as such are very complex. And those complex provisions need to be brought out in form of a table which says that what are the compliances and what are the non-compliances. And again, we have to correlate with the disallowance under Section 48. Now, to add to these complexities, this year we have got a new introduction of 194R, which is one of the most complex of the TDS provisions, which has got a lot of subjectivity involved. Now, you must be aware, when 194R was introduced, the government had initially, commenced it from 1st of July 22. But before even it was introduced, there was one circular of clarification. And somewhere again in September, there was another second circular which came in, which clarified the entire matter. So that means you can imagine the complexity of that section 194R, which a tax auditor is now required to comment upon and see whether this 194R has been complied with under that clause 34A. So why these standards of auditing? As Chawla sir has correctly mentioned, that we have to follow the standards on auditing for doing the tax audit. Because if you don't follow the standards on auditing, and if there are any errors in this tax audit report, there is always a high probability of this disciplinary action, where there are circulars from CBDT to the income tax department, to the commissioner, that if they find any discrepancy in the tax audit, they should refer this matter to the Institute for Disciplinary Action. Now, in that situation, lots of such disciplinary cases are pending before the disciplinary committee on count of only tax audits. So we should not take these tax audits lightly and do it as a routine matter, but should be done in a professional manner as a chartered accountant, where our standards of auditing are the guiding principle. So let's look at how this standards of auditing is going to gel with this tax audit requirement, and how are we going to comply with it. As Chitle sir also has rightly mentioned, that even in your disciplinary action, if you go and speak for hours, okay, you have done this work and you know the law by heart and you know all this, and you have done so much of work and sitting late nights or worked whole night, that is not going to help unless you are able to present the files which will speak for itself rather than you speaking for your files. So this is the way in which your documentation, the standards have to be maintained, and we will have to comply with those standards in a religious manner as it is required, and then you will not worry about the disciplinary aspects. So let's look at what is our today's agenda. We have almost about 2 hours to discuss this particular aspect. First of all, why standards on auditing? See, whenever I speak for so many lectures which I have given, my principle is to give the conceptual knowledge as to why we do such things. So why standards on auditing? Why a standard is required? So we have to understand what is the need for the standards on auditing. Essential of conducting an audit. What are the essentials to conduct an audit? What is the background of this auditing standards? Applying auditing standards in tax audit. How do you really apply audits in auditing standard? We'll take up some case studies. We will do some practical aspects. And I will take you to some real life situations where you will understand that if you're not complying the auditing standards, what will be the end result of the whole thing? And some relevant standards we will discuss, not the entire thing because we may not have that much time to do that. So as I said, why standards on auditing? See, people who have traveled, all must have traveled by flight. And when there is a flight lands through an ILS system, that is the instrument landing system, the instrument landing system guides the flight path to its proper, middle of the runway, and it allows it to land safely. Same way, our standards of auditing works like an ILS for us. When you are doing an audit, it will guide us to the right path so that our report is free from any misstatements, and it will not allow us to deviate from our right path. So that is the role of the standards on auditing, which will be a guiding force for us to, and lay down the processes which will enable the auditor to follow the correct path and come to the right conclusion that is required to arrive at. So that is how the standards are designed. It has been designed very thoughtfully, very carefully, so that these standards will not allow you to make mistakes. And if you really follow this religiously, you do not worry about any discipline aspect. See, that is a standardization of the entire process. So complying with the standards on auditing, will substantially eliminate or reduce to an acceptable level chances of any errors in the reporting. Essentials on conducting of an audit. Now, what do you really do when you are conducting an audit? Responsibility of a financial statement. Generally, this responsibility of financial statement lies with the management. This is very important. We should not take up the work of making those financial statements. That is not our role as an auditor. Our role as an auditor is to audit what the financial statements are prepared by the management. In some cases, I have seen that the auditor himself prepares the balance sheet. Sometimes the balance sheets come in the tally format, and then it is signed, which is absolutely not correct. There has to be a proper process. The management has to work out. Now, even for the non-corporate entities, there is a format prescribed by the institute. So we have to follow those formats. Now, auditor's responsibility, as I said, is to conduct that audit in the manner in which the institute requires us to do. That is by way of the standards, following the standards and the processes which is laid down in the various standards which is being prescribed. Now, the third most important aspect is the independence. Now, what would you mean by an independence? There is a separate topic on independence which I will be dealing with. We generally understand independence in a very loose term, that since we are independent, we are a professional chartered accountant having our own firm. We are independent. We are not employee of the company, or we are not relative of the company. So we are independent. No, there can be cases by, even if you are a practicing chartered accountant, your independence is compromised because of certain factors, and I will explain you what factors will compromise your independence and how do we come out of those factors. Ethics. This is the most important culture and principle that a chartered accountant should follow. Ethics. It should be all ethical. There cannot be. See, I was talking to somebody, and then he said one very big firm, big corporate. Their managing director was presented with various options of some compliances with certain thing, and they said everything is within the four corners of law. Whatever those consultants that suggested were within the four corners of the law. The MD asks, is it ethical? Is it morally correct? The consultant says, no, it is not ethical. It is not morally correct, but it's legally correct. So he says, no, we don't want to do this. So that is very important. Even though it may be legally correct, it may fit within the four corners of law, but if it is not morally correct, it is not ethically correct, that itself is a question mark. So as a chartered accountant, professional skepticism is very important. We all have to apply our analytical skills, our brains, our knowledge. As a chartered accountant, we have put in so many efforts, so many of hours of our, in studying this particular course. And, over a period of years, we have gained so much of experience. And today, what is the society looking at us? Society or the stakeholders like income tax department, what are they expecting from us? They are expecting from us a quality performance, quality job, which will stand to the test of any verification. Analytical ability. That is exactly, we have to analyze the data and find out if there are, it's like, sometimes when you look at those figures, the figures speak from itself and figure will talk to you. That is exactly when you understand that you are relating with those figures. So that is where, like, for example, you appoint an, architect or somebody, when he will look at the very barren house, he will be able to visualize what he can do for this house, to renovate. Similarly, as a chartered accountant, we would be able to visualize what are the issues in this particular balance sheet if we are able to look at those balance sheets. Now, with this computer era, the e-auditing and the techniques, auditing tools, we have to be much more, competent and, updated with the technology, where we have to ensure that we are in a position to utilize this technology for our better job. Like when I became chartered accountant, there were no computers, there were no mobiles. Such thing was available, but we had to do manual. I remember when we used to go for audit, was the tallying of the trial balance of the manual was a challenge. So the company used to struggle on the tallying of the trial balance. And now we all get that everything tallied from the computer. So a lot of changes have taken place over a period of several years, and those have helped us in doing work which is more creative rather than doing something manual work. Now, what is the background on the standards of auditing? Standards are prescribed by our institute, ICI. It will provide quality assurance that yes, whatever work you have done, the process has been correctly followed. And since the process is correctly followed, naturally the result will be correct. cover all aspects required to make an assertion, because you are making an assertion, whether it is a true and fair, whether the 3CD is true and correct. All these are assertions which a chartered accountant, which an auditor is making. And to make these assertions, whether these standards are going to help you in arriving at that conclusions. Take care of what can go wrong. Now, this is the theory, and this is the principle on which we always follow in our auditing principles in our office. What is the meaning of this? Okay, whenever you start any work, whenever you start any audit, you must first identify in this audit, in this thing, what is it that can go wrong? That means what aspects are there which can lead to misstatements. And if you find that by your audit process, something which you can improve upon to cover those misstatements is basically what is the principle we follow. Is also mentioned in our standards like assessment, risk assessment. You have to do the risk assessment, and once you do the risk assessment, you have to plan your audit in such a way that these risks are mitigated. That is exactly what we mean by what can go wrong. Support in terms of any subsequent claims. Yes. Today, the situation is pretty fragile. You have seen many cases are, levied against the chartered accountant firms for negligences, for various disciplinary committee actions because of, certain things which comes out later. And those are lapses which result into being debarred from the practice. And it is very embarrassing. After so many years of practice, you get a bad name, which you have put in so much of effort in your, chartered accountant career, and then you lose by just a few mistakes, and then you might lose your entire practice. So it is better we are, ready for all the such situations, and we do not have to face this untoward situation. Professional diligence is established. So when the standards are followed, the professional diligence is established. Let me again share one more aspect. Many people might be saying that, we audit very small partnership firms. So where is the risk? There is no risk because those partnership firms will not have any disputes or anything. But believe me, sometimes such things happen even in the partnership firm owned by husband and wife. Tomorrow there is a quarrel between husband and wife. The matter is going towards the divorce. Then the auditor is the first one to be in the problem because they will both fight against the auditor. So that is where we have to be very careful. Our documentation, our standards have to be correctly followed. Certain standards are modified in line of international standards. You must have seen the reporting standards have been modified to meet with the international standards because our balance sheet, our financial statements are being read by investors, foreign investors. So naturally, we have to be, in sync with the world financial statements. Now, which are the standards of auditing which are really going to help us is assessing the risk, which is very important because that is a starting point. Unless you assess the risk, how can you plan an audit? First of all, we will have to find out in this particular entity, in this particular assessee, which are the areas which requires what requires little more efforts and more verification and senior people working on it. So accordingly, resources also has to be assigned. The audit plan also has to be structured in such a way that those areas of problems are properly identified. Like I'll give you a very simple example. When you are doing an audit of a construction company, AS7 working is the most critical working because that can change the entire P&L account. Your sales can change, your bottom line can change because if your estimations are wrong, your cost estimation is wrong, your entire bottom line, your sales figures will go wrong. So, if that is the area which is the risk area for your turnover as well as your bottom line. And management can manipulate that budget or that cost estimate to suit their requirement. And that is where the auditor has to find out whether this cost estimate is correct or not. We will discuss much in detail when we will go to that assessed risk. Planning and audit. As it is said, well planned is half done. So we will have to look at planning. How do we plan an audit? And accordingly come to the level where the audit is properly done in a proper synchronized way. Documentation. As I said, this is the heart of the entire standards because everything, all the standards, whichever it is, whether it is assessing risks or planning of an audit or audit evidence, sampling, everything documentation is required. So whichever standard you take, documentation comes into play. So documentation is the most important aspect of the entire standard. We will read in detail about this little later. Audit evidence is what we are supposed to verify and see whether it matches with the statements. External confirmation, sampling. Of course, in certain cases, sampling may not be applicable. I will come to it later, where sampling is not applicable and where sampling is applicable. External confirmations are required. It is mandatory for the auditor to seek external direct confirmation. We cannot rely on the management to obtain those confirmations. It has to be a direct confirmation from the auditor to those parties, and the response should also come directly to the auditor. Again, here the principle, what can go wrong is if this is not followed, and if it is routed to the management, there is a possibility of getting a manipulated response, and you might not know what is the correct balance. Analytical review, I already discussed. That is our mind which has to work, and we have to identify certain, like for example, when we look at our pathological reports, and we know the blood counts, and we know that whether our sugar levels are higher or lower, then there are always benchmarks. And if those benchmarks are not right, we know that whether we are diabetic or non-diabetic. So all that is the analytical review will throw up, whether there are problems or not. So by looking at those pathological report, a doctor is finding out what is the problem with you. So similarly, by looking at analytical review, a chartered accountant will be able to find out where is the problem in that organization. If the GP ratios have gone down suddenly, that means there is something wrong with either with the stock or the purchases. So you will have to find out where there is a mistake, where there is an error, or whether these figures are correct. So all that has to be validated looking at the analytical review. Estimate uncertainties, as I mentioned earlier also, when you're looking at A7 working, it is an estimate uncertainties. Most of our items in financial statements are estimates. Your depreciation is estimate, gratuity is estimate. Lot of items are estimates. So when we are looking at estimates, how are we confirming that these estimates are correct? So that is again a challenge for an auditor to find out whether these estimates are accurate. Fraud. We are not really dealing with fraud as of now because that is more of the corporate level or more of into auditing of the statutory requirements. But still, fraud is one of the important aspects in standards or auditing, which the auditor is supposed to also look at if there are any frauds in the organization, because that will also deviate the financial statement from the correct part. Going concern, whether the organization is a going concern. Now with the COVID, a lot of organizations have had a problem in terms of going concern. Relying on a work of an expert, because when doing tax audit, there is certain certification which will require from outsiders, and that certification is important for us to whether we rely on those certificates. I will give you a simple example. When we do audit under tax audit, there are two types of tax audits. One where the statutory auditor is somebody else. So there is, let's say, XYZ firm which is doing the statutory audit, and ABC firm is doing the tax audit. So the tax auditor is going to rely on the statutory auditor's financial statement. He is not going to go into the true and fair of the financial statement. He is going to work only on the 3CD aspect of it, where the 3CD is true and correct. So his reliance on the financial statement is totally on the statutory auditor, and it will be mentioned in the 3CA. That form will be 3CA, which will say that he's relied on so-and-so statutory auditor's report dated so-and-so, and true and fair has been confirmed by this person. We are not getting into true and fair aspect. Whereas suppose the person who is doing the entire audit, including the main statutory audit as well as the tax audit, then he is even giving reporting also on the true and fair, as well as the 3CD on the true and correct. So both these things are being covered here. So when there is a reliance on another chartered accountant, yes, we are permitted to rely on a chartered accountant who are members of our profession, and we assume that they also have followed the entire process of standards on auditing and accounting standards. Reporting and conclusions. We will come to that, how we have to report as far as the tax audit is concerned, the 3CA, 3CB formats. How are we going to handle those formats? Because there is slight conflict with our reporting, our standards on auditing on the reporting. So how do we deal with those format mismatch, and how are we going to bring it out in our notes as to this kind of difference in the report, and bring it out there and comply with the standards accordingly. Now, applying standards to the tax audit, we'll just quickly go into the basic aspects as to how we are going to comply with the standards in the tax audit. First of all, as I said, documentation. Documentation is heart of the standards on auditing. I already told you. Without that, you cannot really think about audit. 3CD prepared by management. See, sometimes we assume that 3CD is the responsibility of the auditor. No, absolutely not. 3CD is to be prepared by the management. They will prepare the 3CD, all the figure work, all the clauses, whatever answers are required, whatever figures are required, schedules are required, they will give us. And the tax auditor is only required to verify those and report whether it is true and correct. Now, there is a difference between true and fair and true and correct. When there is a true and fair, there is a judgment, a statement of judgment, whereas true and correct is the accuracy to the minutest level. You cannot have a judgment. If it is either it is right or wrong. So here we have a judgment and here we have a accuracy level. So we have a true and correct statement as far as 3CD is concerned. So concept of materiality here does not really apply to 3CD, because if you say that in materiality certain items we can miss out. No, we cannot miss out. For example, there is a clause relating to giving the unsecured loans taken and loans repaid to under 269 SS and 269T, and we are supposed to report about those loans. Now, in that situation, we cannot say, okay, I will miss out some few loans. That is okay. If they are not material loans, we miss out those loans. No, that is not acceptable. The loans, each and every loan that has been received or each and every loan which has been repaid have to be disclosed in the 3CD format. Now, so there we have no leverage, because we cannot, even for example, disallowances under 40A or the clause 34 relating to the TDS. We do not have a leverage. Okay, we will only take material items and we will not take non-material items. There is no leverage. We are required to report each and every item that requires compliances with TDS. So here, in case of 3CD, we cannot have a choice of eliminating some items on the grounds of materiality. So we have to go into each and every item that is applicable, and we cannot forget something. Use of disclaimers at appropriate places. You are aware that certain things which the 3CD expects the auditor to report is impossible. Like, for example, not really impossible, but very, very difficult. Like, for example, in one clause, it says that whether the assessee has, received money by a loan by way of a pays account check, or it has, repaid the loan by way of a pays account check. Now, the assessee does not have the evidence in his possession to prove that yes, he had issued a pays account check. How can an auditor report whether the pays account checks were issued? From the bank statement only will say it will show clearing, maybe, but it could be a pay and order check. It did not be a pays account check. Now, the bank is not going to give you back those checks which are in the custody of the bank. Those checks which has been issued by the company, by the assessee, that those checks, whether they were pays account. So that naturally the auditor has to give a disclaimer saying that there was no evidence in possession of the assessee, and hence we cannot verify. So there will be several such disclaimers, because we as a chartered accountant have a limitation. We cannot go beyond that limitation. So we will have to give appropriate disclaimer to save ourselves. Otherwise, it will amount to an open-ended book. Relying on work of another auditor or expert, as I already mentioned to you, statutory audit is done by another firm. There are several such instances in the 3CD where certificates are obtained from various experts, and we rely on those certificates. And based on that, we will have to see that whether those experts are capable and they are in a position to give that level of certification. Otherwise, no, we cannot rely on those certificates. Management representation is required, but that is not a substitute for our verification. You cannot say, I have taken a management representation, so now I did not verify this. No, that is not the case. Management representation only is the information being given by the management to the auditor, because always we say as per the information and explanation given by the management. So by that is the basis on which the representation letters are taken. But that does not absolve the auditor from saying that I've relied on the management representative. Yes, on certain aspects, we have no choice but to rely. So that disclaimer has to be that it has been relied on the management representations. So we have to be very careful. We cannot just blindly rely on the management representation alone. Now, what are the resources available for a chartered accountant, for a member of the institute to, conduct this tax audit? There is a beautiful guidance note on tax audit under section 44 of AB of the Income Tax Act, which is published by the institute, and a very, very detailed and a careful analysis of the entire thing, which gives clause by clause explanation as to what auditor is supposed to take care while doing this audit. And if the auditor has gone through this guidance note and he has followed the guidance note, he will have a lot of support in terms of his tomorrow. If there are any claims, he can always say, yes, look, I followed the guidance note. But of course, along with that guidance note and the standards, both have to be complied with. It is not just only the guidance note, because guidance note also refers to the standards. It is not in standalone. Then there is another book, Study on Compliances in Reporting in Tax Audit Report. Also is a beautiful book Institute has published, which gives various aspects of compliances and in the close by close compliance as to what a tax auditor is supposed to look into it. As I understand, a lot of new publications are being coming up. Chitlia sir is taking a lot of initiative in publishing various other books, and even the TAQRB is also coming out with various publications very shortly on certain aspects which will help the tax auditor, which to enable them to do audit in a qualitative manner. Now, let us look at some standards and understand these standards in the practical aspect. I'm not going to bombard you with just theory, but I will take you to the practical aspect of these standards and then explain you that how these standards will enable you to do the audit correctly. So that is the first, item is the assessing the risks, which I have already briefly discussed as to how you identify a risk of a material misstatement. First is foremost is that there are three types of risk. One is the inherent risk, one is the control risk, and the third is a detection risk. Now, what is inherent risk? Very simple example I will give you. Suppose when you are auditing an assessee and you have to verify whether the rent revenue is correctly recognized. And on the other end, you have to verify the revenue from this construction contracts. Naturally, I did not ask anybody. Everybody will be knowing that the rent revenue will have a lower risk of misstatement compared to the revenue from construction contract. The risk will be much higher. The reason is very simple. There is a lot of estimation involved in the revenue from construction contracts, and similarly various other types of revenue which requires a lot of estimation. So then there is a chance of a manipulation. And when there is a manipulation, your true and fair can be impacted. So here the auditor has to be very careful and identify those aspects where the risk is higher and where you is to focus on the risk which is higher and ensure that there are no material misstatement. So once you already list out those items where you find that the risk is higher, you have already narrowed down onto the aspects which you need to check and verify, so that your audit is much more meaningful rather than just wasting your time on certain thing which is not really required. Control risks. Now, if there are control, systems are not there in the organization. Generally, this happens with a smaller and medium-sized organization where the control systems are not existing because there is a family-owned organization. The proprietor or the partners have full control over the entire operations, and they don't have a systematic approach professional approach in terms of working. But there are professional organizations, corporates who work in a totally controlled environment and things work as per the systems. So in those situations, the auditor can rely on the documentation in a much larger way compared to the organization which has got a smaller thing, and this family-owned organization where chances of control being overridden will be very high. Suppose, for example, there is a CFO of a very it's a family-owned company, and if the if the MD of the organization will tell the CFO, okay, you have to issue 1 crore rupees of check in my name. Now the CFO generally knows that there is a process, there is a purchase order to make before issuing the check, there is always a process. But when the MD is telling him, he will get up and say, yes, sir, I will issue the check, and he will issue the check because he has to work there. He has to have his job. So naturally, he will obey his MD. So then the control is totally overridden. So this is where you have to be very focused. If these are such transactions which we will have to verify very thoroughly, because those transactions will have problems. And we, as an auditor, we are supposed to verify those transactions. Detection risk. When we are doing sampling, there are possibility that certain aspects of samples will not get covered under the sampling. I'll give you a simple example. When you are auditing 48.3 payments, 48.3 payments says payments about 10,000 rupees not made otherwise made by payee's account check. So you will look at all the cash ledger and try to find out whether there is any payment above 10,000. So what you do is you filter it out. Okay, all payments above 10,000 you want to check. Now, when the management is very, very smart, what they will do is instead of making one voucher of 10,500, they will make one 9,500 voucher and one 1,000 voucher. So your entire, it will not be detected at all. That voucher will not come in your sample only. So you will not verify. This is what happens, and this is the control detection risk. So you will have to look at not only 10,000 and above, but also some vouchers which are in the borderline, which probably has been maintained that way to avoid detection. So this is where we have to apply our professional skepticism to see that this management does not use this as a tool. What is the objective? Providing a basis for designing and implementing responses to assess risk of material misstatement and audit planning. So this is the basic objective of this particular standard, and to reduce the risk of material misstatement to an acceptably low level. So it brings down the risk factor and the material misstatement is avoided. That is what the objective of this particular standard is. So how to achieve this objective is to apply the risk assessment procedure, understand the entity and its environment, whether the entity is a professional environment, whether it is a family-owned environment, whether systems are in place, whether there is a control system in place, and whether the systems are working, whether a control system is working. Risks that require special audit consideration, you should identify and then check those things. Risks for which substantive procedures alone do not provide sufficient appropriate evidence. So you will have to go for something beyond that. Now, for example, 194R. See, when you were earlier doing audit under normal situation, tax audit, when we were checking TDS compliances, we were looking at 194C, we were looking at 194J, and you could look at those ledgers which will give clear-cut idea as to where the payments have been made, like professional fees, contract payments, or any labor payments. All this will give you those 194J and 194C payments. But now under 194R, it could be spread over entire spectrum of P&L account. You never know. Hotel bills, it could be gold coins, sales promotion, it could be anywhere. So it could be these are payments made to another parties, whereas the benefit is to somebody else. So that also has to be identified, whether this payment which is made to somebody else, the benefit has gone to somebody else. That also 194R requires us to find. So as an auditor, the responsibility has gone up drastically. So we have to be very much agile to be able to find out this kind of deviations. Risks where substantive procedure alone will not provide sufficient appropriate evidence, we will need something else. Revision of risk assessment. Once you find that no, the risk assessment is not correct, so we have to revise it. We have to continuously update. Documentation, as I said, again, the heart of the entire standards. It will apply to in all the standards. Complex structures have been made by the assessee to circumvent certain things. That again we need to verify and see whether the complex structures, what is the objective, what is the purpose for these complex structures. How to achieve this objective is inquiries with the management, analytical procedures. Then you do an observation and inspection through all the various things, and then find out whether there are any things any red flags which you can find out. Information that was obtained in the prior period will also help you. Last year you found this. So okay, whether similar situation is available in the current year, check that. Discussion among the engagement team to identify one team has found out something else, so it should be shared with the other team. Okay, whether in purchase mein kuch mila hai, okay, then you check at the sales level whether you find similar things, situations in sales level. risks arising from IT. Yes, that also is very important, because sometimes the rounding up also can be, transferred to some different account and played around with IT, who are authorized to, I'll give you one more example. There is a company which has SAP as its, system, and SAP has got a very robust system. But then somebody had an ability to manipulate the IT controls. What he did was, if, for example, some TDS has to be deducted, the masters he would go and change. Okay, if 2% TDS is required to be deducted, the master was provided, and the suppliers which were required to be deducted, they were already tagged. But that person who was able to manipulate this and can avoid TDS being deducted on certain payments, this was done through overrule of the IT systems. Now that, as an auditor, if you say that, oh, everything is perfect, working fine, and there are systems in place, so TDS will be perfectly complied with, no, but this will be a red flag. Related party transactions. When related party transactions are there, there is always a chances that the pricing and all that thing might not be as per the arm's length price. But as an auditor, as far as the 48(2)(b) is concerned, we are not required to report on the arm's length price, except unless we are doing a TP audit. But we are only, at least we have to see that whether such related party transactions are vitiating the financial statement. I will give you one very classic example of a recent one disciplinary action being initiated against one member. What had happened is there were about related party sales in the company, and let's say out of 100 rupees of sale, 55% of the sales were to a related party. And the auditor had not put that as a risk factor, and had not verified those transactions from the arm's length perspective. Although he was not required as such under the 40A or under 40A 2B to verify arm's length price, but then there was a complaint saying that this is a material element in the entire sales, and if 55% of the sales is to a related party, then the sales could be inflated or deflated based on the understanding between the parties, because they are related parties, and because of that, the profit or loss could have been impacted. So this was never taken as a red flag. This was never taken as a risk factor in the thing, and that created a problem for the auditor. So it is a control environment, as I again told you, whether the management has the ability to follow. Next one is planning an audit. Now, after identifying those risks, we have to ensure. Can you hear me properly? After identifying those risks, it is important to plan an audit properly. And if we are not in a position to identify the risks, how we can plan the audit? So this is the next step in our entire process as to planning an audit. Whether we have to do test of controls or whether we have to do the substantive audit will depend on what answers we get from the risk assessed and whether the control systems are existing. Then only we can decide whether we want to do 100% audit or we want to do test sampling. So substantive procedures also is required in the smaller entities, because where the control systems or sampling or processes are not up to that level, not up to the professional level. So then you might have to go in for a substantive verification. Substantive verification means 100% verification of entire transactions. So assertion about the transactions, when they have occurred, when completeness of the transaction, accuracy of the transaction, cutoff, whether March transactions have been properly provided for. We should not have happened that the transaction has happened in April and the provision is not made, although it relates to the March, and certain transactions which are relating to March have not been recorded for. So that we should see the cutoff position. For example, sales which are made but not recorded, or sales which are to be recognized, not recognized. Could be both ways. Account balances at the period end, confirmations, existence, all that we have to see from the planning perspective. So this is the auditor's response, that we will give more persuasive or substantive audit. Experienced staff it has to deploy depending on the level of risk. Suppose if the risk is high, you have to have a higher level of knowledgeable staff. You cannot put a very junior person there where there is a risk is high. So it depends on what level of work we are supposed to give. If you have not assigned it correctly, there also you are responsible as a just because, okay, somebody has done the work. That is not right. Whether that person was competent to do that work, that is again important. Unpredictable. The audit should be unpredictable. It should not be that we should only check about vouchers above certain level or certain level. Otherwise there will be again a manipulation. Test of detail versus test of control. Whether you check the control systems or you check into detail, again, will depend on the control systems existing in the organization. Control processes to be checked once in 3 years. We should see whether those processes are properly operating and effective. Changes in the IT authorization. If there is an unauthorized access, that also is one of the serious lapse in the systems. Now, let me take you to this very important aspect, the heart of the standards on auditing, that is a documentation. Now, why these documents are required to be prepared? There is a very simple, dictum that what is not documented is not done. As Chikle sir has told that if you go to the disciplinary committee just saying talking doesn't matter, doesn't help you. You have to go with the files. Now, document is what is going to speak. When the peer review is conducted, how the peer review is conducted, that the peer reviewer, when they come to the office of the PU, they will say, okay, select certain files as a sample, and they will sit in a separate cabin, and then they will see this file, whether in the hard form or soft form. And if they get all their answers from that, whatever answers are required to make this assertion, whether it is true and fair, true and correct, if the assertion, all the answers are from that file or that soft copies which is provided, then the audit is correct. That the audit is passed the test of the documentation. Otherwise, no. That means there is some deficiency. We can't make it person specific. It has to be system specific. It has to be through the documents. The document should talk, not you. The auditor's responsibility to prepare the audit documents naturally, because that is their responsibility. Evidence of basis of conclusion. How did you conclude that particular thing is based on the documents which you are going to present. Evidence that audit was planned and performed in accordance with the SS. That will show that yes, the entire process was done through in accordance with the SS. Audit documentation enables the team to plan and perform. Otherwise, without that, it will be totally like a ship in the ocean waters without any navigation. Today, without Google, you don't move out also, because without Google, you don't know where you have to go. So you get lost. So here you need those navigation skills, navigation tools, and that is this standards on auditing provides you with these tools. Be accountable for its work. Yes, I have done this work. Retaining the record of the matter, continuing significance of future audit, because future audits you may need to refer what you have done last year. Conduct of quality control reviews. Conduct of external inspections. Somebody comes and verifies, you can show them those things. Support in case of legal actions. As I said, documentation will help you in that. What are the documents essentials? How the documentation should be there? It could be either in an electronic form or a physical form. It is not necessary that everything should be in the paper form. You can always, now with the computers being available, you can have most of the parts in the software. You can have scanned copies in the software. You can have all the folders properly, designed. And that is how the file should be. Now, there is, of course, a proper systematic way of filing. Now, I'll tell you how we also do it in our office. There are flaps in our documents. Now, that flaps, let's say flap number 7 should contain something about TDS compliance. Now, each and every file of tax audit of flap number 7 will have a TDS compliance that schedule, that working. So that anybody, any file you pick up, you will get a standard flap 7. So this is how we work out, so that everybody follows the same pattern. So there is any particular clause is not applicable, you can have a flap saying that, okay, this clause is not applicable. One small page. That is also required. So, and again, when you are looking at the soft copies has to be properly saved in a folder, properly, in a proper nomenclature of the files have to be maintained. Now, I'll tell you one very amusing story. Initially, we didn't have this nomenclatures. We did not have the standard, because I'm talking about very early times when the standard file culture was not there. So we had not put in those nomenclatures, standardized nomenclatures. So everybody used to write their own name in the file. So, there was one file which they had made for some particular aspect which says this is the final. After that, they put in a word final. Then there are some corrections were made in that file. And then it said finally final. So this kind of things will come up. So what is finally final? We really don't know. And even sometimes after finally final also, that file may not be final. So that is very important, because if you have a one file only of that particular aspect, whether it is, you need not put a word final because it has to be final. There cannot be so many multiple versions of that file. So otherwise there will be always a chance of an error. You will pick up a wrong file. So we should have one standard file with standard nomenclature, and those files will have a proper name as to how that file has to be saved. So anybody, even that person who has prepared it, he may not be available, but anybody can easily locate where that file was kept. Now, again, as I said, how the peer reviewer will check those documents. So any experienced auditor can understand entity and work done. It's an independent person. He can check the work and say what work you have done, whether that work is as per the standards and whether the conclusions were correct. So that is the level of documentation that is required. Now, who performed, when and who, reviewed and when, that is again very important. If it is not mentioned, it is like a file without any paper, without any life. Now, I will give you another example of how the files are sometimes maintained. Sometimes people want to show that they are doing a lot of work. So what they will do is they will maintain 10 to 15 files. All these files have got lots of papers. But sometimes when you go through these files, you will find they're all dead files. The papers are of no relevance, but they are just collected just to show that, yes, there is a lot of work has happened. I will give you a simple example. Now, under one clause of tax audit, you are required to report whether the assessee has made any purchase or sales of any property which is below the ready reckoner value, which, of course, subject to that limit of that 10% and all that. So if that is a situation, then the auditor is supposed to comment on that particular thing. And for that, the auditor generally keeps in his file certain documents required to prove that, yes, this particular transactions are at the correct prices. Now, I have seen that they collect the entire set of documents. Suppose there's a real estate company and selling about almost 200 flats. So they will collect all the 200 flats agreement and keep it in the file and make it a big file. It is not required. Only index 2 is required. That will give you the stamped with ready reckoner value. That will give you the agreement value. And from that, you can compare and find out whether this particular thing is correctly done. Why do you need to keep the entire agreement? So, and again, after that, there should be one summary on that saying that, yes, in these situations, there is no deviation. Only in these cases, there is a deviation, and those are properly marked. So whenever, and there's been signed by somebody who has prepared it, somebody who has reviewed it, and somebody who has again checked it after reviewing, some senior. So that and the date, time, when it has been checked, that will make that file live file. Otherwise, it's a dead file. That file which will speak, yes, that what has actually happened. Like, for example, there is an agreement, which is a joint venture agreement. You did not keep the agreement in the file. You only put one page saying that who are the parties to this agreement, what are the substance of this agreement, and whether. Now, after that, one small line that, yes, whatever was required under this agreement has been properly incorporated in the accounts. That is more than enough and signed by the person who is checked and who is verified. So this will give you more important, more relevant information rather than putting that entire agreement, because the agreement will not talk. It is this paper which will talk that, yes, that compliance has been done, rather than having the full agreement there. What somebody after going to the agreement, what he will come to know, whether it has been, then question will come in his mind, whether it has been properly accounted. What is the agreement? So that answers are not given. So answer is given by that one page. So that is what is required under this particular documentation requirement. So timeliness, again, very important. The documents have to be timely obtained and kept in the file, not after the audit is over. That is not acceptable. That otherwise, how will you make a conclusion? You have already come to a conclusion. Now you get a paper which is contradictory to what you have concluded. How will you change your conclusion? So that is absolutely not correct. Before you sign off, before you come to a conclusion, this paper has to be received by you. And then only you make a conclusion based on going to those papers. That is the requirement of the documentation, not just to show that, yes, you have done documentation. Yes, you have complied with the files. No, that is only like, compliance in the form, not in the spirit of the whole thing. So now the assembly is allowed under the standard within 60 days. Now, what is the meaning of assembly? You have got several papers. You have got so many papers in the file. You can organize those papers, give numbering, cross-referencing, all that you can do. This should be all cross-reference. Suppose if there is a one piece of paper, there is a working paper. In that, there is certain things which you have to, which are referring to some working. Okay, then there should be a cross-reference on this page. This particular working is given. You refer to this working. So then when you go to that working, you will get that working. So all that paper will give you the correct link where you have to go and search. Otherwise, you will be totally lost. You are supposed to retain these files for 7 years. That is the requirement of the standard. Papers which should not form part of file, I told you, which is junk, which is duplicates, which are extra copies, no need to keep in the file. Keep what is relevant. Make it as a part of our culture. Now, if all our members, all our chartered accountants are tuned to this particular culture of documentation, following these standards, it's a part of our, it's in the blood. Okay? Without that, we will not sign off. Then I think disciplinary actions will cease to exist. So this is where we have to, change ourselves. We have to upgrade ourselves to that level, and inculcate that culture in our blood, that we will not sign off unless there's documentation, unless the standards are complied with, and we will follow this thing as required by the institute, and then we do not worry about any claims or any processes. It provides, this documentation provides evidence of audit procedures performed naturally. Documentation, which is significant matters of professional judgment, how arrive. Now see what we generally do is, there is something called, memorandum of dispute resolution. Now, for example, when you're doing tax audit, you come across various situations where you do not know, whether you go like this or you go like this, whether there are so many points of debatable nature. Whether a stand should be taken like this or like this. For example, 194 are very, very ambiguous point, whether it is a benefit or not a benefit. So how do you resolve this issue? So what do you do is, what we do is, we the person who has initiated this particular query will prepare a basic facts of the case, like a case for opinion. Then he will attach all the various relevant judgments or whatever material available on that topic, and he will try to rationalize and work out a solution, whether this is right or this is right. Based on his judgment, that will go to the higher level. They will apply their mind. It will come to a partners, maybe the audit in charge, audit partner, or then there is an independent partner, review partner. They will also apply their mind. Within the firm, there are experts on the tax. If there is something on the tax, they will apply their mind on the tax. If it is something on company law, there is a company law expert who will apply his mind. So if after all that, if we come to a conclusion, then there will be a notice saying that, yes, this is a particular correct way of approach to be done based on this particular principles. And then it is signed off by all the people and the follower. But if still the firm cannot come to a conclusion, then maybe they will refer it to a very higher level firm who has got expertise in this particular aspect, who has got a specialization in this aspect. And then they will take his opinion, and that opinion, then they will all discuss, and that all that documentation again has to be in the file. How did you come to this conclusion? And once you have followed that particular process, and once you have followed that, then you are safe. Whatever decision has been taken, that nobody can challenge. So identification of specific items or matters tested. Documentation of discussion with management. There could be minutes of meeting with the management, people who are of the corporate governance. They have to be informed about what your process is, what are the deficiencies, and they have to give answers and explanation on those deficiencies. And those are discussed during the minutes. Those minutes should be noted and kept in the file, so that you know what answers, what queries you raised, and what answers you got from the management. And if there is a departure from a relevant requirement, how did you deal with those requirements? Matters arising after the date of auditor's report. If there are certain matters which may require you to report again, or maybe modify, recall your report or modify, all that is as per our standard again. Whether we can do that we have to see. Now, what types of working paper? What types of working paper are there? There are two types of working paper. One is the permanent audit file, and then there is the current working files, which they're called as working papers. We call it WP. So that is a permanent. What is content of an permanent file? It could be an appointment letter. See, generally when we do tax audit, we ignore something that we have to be appointed as a tax auditor. Generally, under the Companies Act statutory audit, there is a requirement of ROC. So always that is followed. But in case of tax auditor, there is no such requirement. So people don't take an appointment letter. They think that we are already appointed verbally. No, that is not correct. You should have a engagement letter, appointment letter by the assessee or by the company saying that yes, you have been appointed for the tax audit. And then that should be the basis of a starting point. Then again, if there is a previous year, there is an tax auditor or other tax auditor, you have to communicate with that tax auditor. Now, previous means that need not be in immediately preceding year. Suppose, for example, the assessee had tax audit in the year 2020, and 21 and 22, they never had a tax audit because they were below the threshold limit. And 23, again, now they are under the tax audit. So you have to still communicate with that preceding tax auditor because he was the earlier tax auditor. And when you are now being appointed, it's not that there was no tax auditor in the immediately preceding year, so you don't need an NOC. No, you need an NOC. You will have to communicate to the earlier tax auditor. And again, as far as the NOC is concerned, people, generally make a mistake of sending an email to the tax auditor and saying, okay, please communicate on this, whether you have any objection or no. That is not correct. The institute, today the requirement for this NOC still is in terms of the registered AD post. They have not allowed emails or any fax or any such thing, because still the registered AD post is maintained, and we have to send it by registered AD post, and they have to reply back as an NOC, and then NOC should be in our file, and then we can start the audit. Constitution of the entity, whether it is a partnership firm or whether it is a company, so memorandum articles, companies, partnership firm if it is a partnership deed, if it is a partnership firm, AOP deed if it's an AOP, whatever is the LLP to LLP deed, all that constitution deed that will give you, and they should be the latest, because generally as far as the company is concerned, you can always make a search in the register of companies and find out whether it is latest. But as far as partnership, it is very difficult to find out whether it is latest, because of course in register of firms you can always get it, but it is a very cumbersome process. Whereas in case of a AOP, you may not get any, because there is no concept of registration of an AOP document. So you have to get a management representation. This is the latest, and after that there are no further deeds being executed, and this is the latest deed which they have executed. Now, registration certificate copies, PAN, TAN, GST. Because why? Because you have to give a PAN number in the, you have to verify the PAN number in the 3CD. And how will you verify unless and until you have a PAN copy? So you cannot just say, okay, everything is okay just because the company has mentioned PAN. Now, even the address given in the 3CD should be what they have given to the income tax department, and not their other addresses of the admin offices. So you should be very careful what address is communicated to the income tax department. You should verify, and then that address you should see that it is given in the 3CD. Legal structure of the entity, whether it is a partnership firm, whether it is a company, because that again is mentioned in one of the clause in the 3CD, and we have to verify what is the structure of the entity. Organization structure. What is the organization structure of the company? Who are the directors? Who are the partners? Who are the CFO? Who are the people who are extracts of the legal document? If there are any legal document relating, I just said extracts, and then there is a summary sheet on that. Evaluation of internal control system, whether this control system is appropriate or not appropriate. Assessment of risks and its management. That is again, as I mentioned earlier, standards. What is the risk management? Major policies relating to accounting. What accounting policies this company is following is also to be seen. Accounting system, which accounting system they are following, whether they are in the SAP, whether they are in Tally, all that will determine your method of auditing. Because if there are higher levels of ERP or something, it will give you more control systems. associated enterprises, bankers, lawyers, etc. Who are they? Audited financial statements of the earlier years. You should also have in our file which are the audited financial statements so that to get a comparative analysis. Significant ratios and trends of the earlier period so that you know how the company's entities movement of the ratios are moving, whether it is going down, going up, or there is a huge variations. So then you know that risk is where. Management letters, all the representations. Significant audit observation of the earlier years, which you can take care in the current year so that you don't miss out what you had already found out in the last year. Now, what is the composition of a current working file? List of books, which again is part of the 3CD. You are supposed to see whether these books are maintained by the assessee and whether we have examined those books. All that has to be maintained. Now, most of the entities are all under computer software. And computer software is now not only in their own office, but sometimes it is cloud-based. So where it is located, where the books are located. So where the server of that particular thing is located, you can say that books are located. But if they have access, we can say they have got access in various premises. And sometimes it is a worldwide access. You can access anywhere. So again, that has to be mentioned. Extracts of important matters in the minutes. We have gone through the minutes of their meeting. Suppose if it is partners meeting or if it is LLP meetings or if there is a company meetings, what are the important decisions being taken by the company? Whether those have been properly incorporated in the books, that again has to be checked. Planning process of the audit will come as a part of the working papers because that is how your work starts, plan starts. List of audit team who are going to do the audit. So you know these are the people who are going to work on it. Analysis of transactions and balances. You analyze the various transactions. Evidences of work performed by the audit team. There is some continuous supervision of those audit team which are performing and whether they are doing right on the track or they are deviating. As I said, ILS, whether they are on track or they are moving out of the track. Sometimes it happens, they waste time and when they come back after that, you have to redo the whole thing and then it wastes a lot of your organization time. Communication with the client as to what are the issues they have faced and those issues, how do you have resolved. Conclusion reached by the auditor. After all this audit is over, what is the conclusion you have reached? Whether the accounts are true and fair, whether the 3CD is true and correct, or if there are any errors, those can be discussed with the management. And if you do not get satisfactory answers, those will come as a qualification. Copies of financial statements, information being reported, that will be part of your audit file. Now, audit evidence, because that is the audit evidence which will determine whether this financial statement which is made, whether this is supporting by that audit evidence. Like, for example, there is any expenditure voucher which is supported by an audit evidence by way of a payment voucher. So that becomes a purchase bill. That is an audit evidence. Sales bill is an audit evidence for sales. So these are audit evidences for various aspects. And this audit evidence will determine whether these entries are correct. So that gives you the comfort of that entries which are being passed. The evidence will confirm those entries. Now, whether sufficient appropriate audit evidence, whether you receive. If you have not received sufficient appropriate evidence, then your audit report will be qualified that you have not received audit evidence. Source of audit evidence. What is a source? Generally, external source is more reliable compared to an internal source, because if your external source is there, you will be able to substantiate with that. For example, when you are verifying your items in relation to the stamp duty ready reckoner value and agreement value, the register index 2 from the register of assurances, which will be the external source, because that is the document prepared by a government agency, and that will give you evidence that yes, their agreement value is higher than the stamp duty value, or other way around. Whatever that evidence is proved by the external document, and that is more reliable than the management giving any kind of an assurance. Source of evidence, that is again discussed. Audit procedure for obtaining audit evidence. External confirmations, you have to call for external confirmations. It should be again direct confirmation. It should not be through the client. Recalculations, you have to do your reworking. Like for example, when you are looking at clause 34A, when you are looking at the TDS compliances, you must ensure there should be one column. See, first column of your 34A, what does it do? All the items on which TDS ought to have, is required to be deducted. For example, let's say there is a professional fees. Yes, TDS is applicable. So you have to report that. Now, then you have to look at it, whether it is within the limit. Suppose if it is any bill which is within below 30,000, 35,000 rupees. So then TDS is not applicable. So that will go in the second column. That will be eliminated from the second column. But the first column will contain all the expenses relating to professional fees on which 194J is applicable. So you cannot say TDS is not applicable, so the first column may nahi aayega. No, the first column will contain all the elements. And now you have to match that column with your financial statement, whether all items of professional fees are included in that column. Now that could be in the expense called professional fees. It could be in technical fees. It could be even in the direct expenses, because there could be some expenses of professional fees which could be a direct expense. It will not be in the admin expenses. It could be sometimes in the capital expenditure also. So this 34A does not only relate to the revenue items. It relates to even the capital expenditure, because TDS is applicable even on the capital items. It is not necessarily only on revenue items. So you have to see the entire gamut of your financial statements and see whether this professional fees bill, wherever it is debited, it could be an advance. Even that will be reflected here, because on advance TDS is applicable. When you make the payment of advance or book the bill, whichever is early, you are required to deduct TDS. So that aspect will definitely come into the first column, because although it is not debited to profit and loss account so far, because it is under the balance sheet, it is under advance. So, but you have to identify those advances given during the year which are outstanding and on which TDS ought to have been deducted. So this is how we, unless those advances are adjusted during the financial year, then naturally those bills are accounted. So you have to only look at this bill, not the advances. So where advances are not yet adjusted at the end of the year, those advances will definitely come under the first column also. So this is how you will have to apply mind and reconcile and recalculate and reconcile with those financial statements, so that you know that whatever is reported is correct. Then nothing is missed out, because that is a starting point. And then you start going to the next column. Out of that, how many are not required to be deducted, and then whether it is deducted and whether there is a non-compliance. So all that process, the starting point is this. Then inquiry, whether any 194R, whether any benefits have been given, because something may not be directly visible from the financial statement. Suppose they have bought the gold coins, then the inquiry has to be made where these gold coins have been given, to whom they have been given. Or suppose they have booked some hotel stay for some people. Who are these people? For what there was a conference, or what has happened? Whether it was a holiday given to some vendors or some customers, whatever. So that all that thing, unless and until you inquire, you will not be able to find out. And if it is not clearly mentioned on the invoices, you will not be able to find out. So you have to make an inquiry with the and take a representation in writing. So yes, these are meant for this particular purpose. And if you are satisfied, then accordingly the TDS provisions will be applicable. Now, this information which is received from the management is to be used as an audit evidence by way of a documentation again. Should be kept in that file, relevant and reliability. Now, external confirmation, as I said, is to be obtained for suppliers, for customers, or from bank loans, bank balances. You are aware about this Satyam case several years ago. The fixed deposits, confirmations were not there. And because of that, huge damage happened. And external confirmation is required directly from the auditors to the bank or to the suppliers or customers, and they should be able to say that, yes, these are the balances, correct balances, not correct balances. These are the extra things, whatever, let them say. And by just giving one time confirmation, you should not just stop. If you have not received the confirmation, you should follow up. So you should have sufficient time to follow up on this. So your audit process should be in such a way that you should have time to get those confirmations. And there can be two types of confirmation. One is a positive confirmation, one is a negative confirmation. Positive confirmation is where you receive the response and then only you accept it. In some cases, you can say that, okay, if you do not confirm within some time, 15 days or something, we will assume that it is correct. But that also it should not be okay. One confirmation should not give you that comfort. You should follow up with another confirmation. Make sure that the email address, you can send this confirmation by email, it is allowed. But email's address is correct, whether is gone to the right person. Otherwise, if you send to the wrong person, he will not respond, but then you will assume that everything is right. It may not be right. Then there are, apart from this, if you do not get this confirmation, the standard, what does it say? You should also perform some alternate procedure just to ensure that these balances are correct. Maybe subsequent payment, subsequent receipt, because you are auditing somewhere in August, September, March has already ended. You might have known by that time whether this money has been paid or not paid or received. So that also gives you a confirmation. Yes. Now, for example, if you have got a bank FDs, you will see 26 years whether interest has been credited in that 26 years or no. So that will also give you confirmation about that FD, because once interest is credited, definitely that is an FD. So all that is a second second resources to find out whether these balances are correct. Determining information to be confirmed as requested, selecting an appropriate confirming party. Again, that is important. You have to select out of a sample which parties to follow. There should be some nil parties also, nil balances also. It should not be only high level, larger balances. You should also look at smaller level balances also, where some outstanding is very also should be confirmed. So all that, you have to find a sample in such a way that it gets a mix of various things, and you are in a position to come out with the misstatement. Suppose sometimes the management says, no, we don't want this confirmation to go to this supplier, because if you send the confirmation to supplier, he will come for a payment. So you please avoid sending this confirmation. So then, yes, you might have to look at it, but then you might have to do an alternative procedure to confirm, to ensure that this balance is correct. So that again is a challenge, how to do that alternative, because without that you cannot just say that figures are correct. Or if you cannot have an alternative method, then the qualification is the only one. Results of external confirmation, exceptions to negative confirmations, evaluating the audit evidence. In negative confirmation, evaluating the evidence obtained and what can go wrong. As I had already mentioned to you earlier also, what can go wrong in this case. Now, analytical procedure is like, analyzing the data of the client for various years and finding out what are the changes happening in the organization, which are not in place, which is not in that sync. And if that is not in sync, that will throw up certain, abnormal items. And those abnormal items are where the misstatements can happen. For example, suddenly you find that the advertisement cost has gone up very high, or some sales promotion cost has gone up very high. There could be possibility that some some wrong accounting has happened. Some prepaid expenses have been booked as a current year's expenses. I mean, it is possible. So again, very important. There is something called ICDS. In the tax audit, we are supposed to look at ICDS also as a tax auditor. And that is the most dangerous aspect of the entire process, because ICDS is something which is outside the books of accounts. The books of accounts is following some standards. Now, ICDS says, no, apart from those standards, there is some deviation. And those deviations are given in this ICDS, and those ICDS deviations have to be done outside the books, that is on Excel. So the auditor has to look at those Excel files, which have been, this may not be the first year. ICDS has been going on since several years now. So we have to see earlier years also. What are the impact of the earlier years period in the current year? Even that also has to be reported. So we have to look at all this analytical aspect in Excel files and see what is the impact of this ICDS on the financial statement, and that has to be reported, because first of all, what is the impact on the profit or loss? Whether there is an increase in the profit or decrease in the profit, all that has to be reported in ICDS. And there are about 10 ICDS, and all are mostly complicated. There's particularly relating to the fixed asset. There is something relating to the foreign exchange, something relating to the real estate construction contracts. So a lot of changes are there compared to what is given in the basic standards and what is given in the ICDS. Even the stock valuations have changed. So all these things one has to, as an auditor, one has to look at it and from the analytical angle and see whether there is an impact on the profit and loss. the reliability of the data, whether the data which is given to you is reliable. By analyzing this particular thing, you will come to know whether the data is of reliable nature. Recently, we were looking at one financial statement of some another entity, and we found that the GP ratio has changed drastically, but the NP has remained same. So when we looked into it, we found that there was some manipulation in the stock records, and that was compensated by some other items in the P&L account. And a lot of such errors were found, and the management took it up with the with that particular concerned CFO, and a lot of things were found in that. So when you do this analysis, you will be able to come out with a lot of such negative things. And it's like, as it will speak, the financial statement should talk to you. This is where there are some errors. It will show you the trends, reasonableness, ratios. You also have to look at the comparative industry. What is the industrial norm, and what is this company's ratios in terms of those industries? That also one needs to look into it, whether the GP ratio is in sync with the industry. Suppose if there is a company which is having a 50-60% GP margin, and this company is showing only 10% GP margin, then is something wrong. Why it is that way? If this particular showing a very high GP. So that again question. Once this is the starting point. This is not you cannot jump to the conclusion. But yes, this is a starting point. Look into it. You analyze it in more in detail. Go into the GP analysis and find out whether there is any wrong booking, any stock deviations. Then you will come to know whether there is any mistake or not. But that cannot be it should not be the basis. Okay, you find some deviations, or you immediately jump to the conclusion that there is something wrong. No, that is a starting point. That gives you it's like, for example, somebody has got fever. That doesn't mean it's got a disease. Fever is an indication that some disease is there. So then you start investigating what you have got. Auditing estimate uncertainties is, again, as I mentioned to you earlier also, that this is where most important risk factor is there, because estimates, many times I have mentioned in many of my lectures that, when we say statement of profit and loss, we should sometimes rename it as statement of estimated profit and loss, because there are so many estimates. Depreciation is an estimate, actuarial gratuity is an estimate, then this sales which is there in the real estate, construction is estimate. We have, if you look at the India's balance sheet, there is a lot of present value estimates. All this is there. So if you look at the financial statement, if you do not look at these estimates properly, then there can be a misstatement in a very high way, because estimates can be wrong, because it is far from reality. Now I'll give you a simple example. This companies now, which we all do online purchases, online shopping, because everybody now is in a habit of buying online. Amazon and this Flipkart and all these things, we buy all this online. When the sale happens from there, when you get the goods, you have a right to return. Now there is crores and crores of rupees of sales happening in this company. Now we do not know. They do not know how much returns will come back, whether out of whatever they have sold, let's say in the last week of March, how much goods will come back. They wouldn't know. They will get it back somewhere in April or whatever. After that, they will get it back, or they may get after. See, there is a 15 days window period or something. So they may get this return after some time. So whether they should recognize sales when they make a sale, or should wait for the goods or that window period to get over and then only recognize sales? No need. They can recognize the sale. Now, how will you factor these returns? You have to make an estimate. What was a past trend? How much returns you received in the several years? Let's say you received 5% returns or 2% return. So make a provision of 2% returns that those will be coming in. Now, sometimes it is possible that what you have estimated is 2%. You may actually get 3%, or you may get 0%. So all this again is an estimate. Another type of estimate is a warranty cost. When again, ICDS requires that warranty not to be considered, because it says no, you eliminate warranty. But warranty is again an estimate. When you buy a computer, they say, okay, give you 1 year's warranty. It is quite possible that a computer will work fine in 1 year and there will not be any repair required. But sometimes it may happen, bad luck, that the computer will require repair 10 times during 1 year. You have to do it. Whether it is 1 time or 10 times, the computer company will have to repair it. So how do you estimate the cost of that? Because the sale is already including that warranty cost. So you have to provide something for warranty. So from where, how will you estimate? Again, it is a judgment, and that is based on the past trend. How many such cases came up? And if it is 2%, 1% of the total cost I had to incur, the company had to incur on repairs, then that much provision is required. So this is the auditor has to verify. Now again, relying on an expert. Suppose, for example, you cannot make an estimate. Now, for example, construction contracts. Now, construction contract, the entire estimation depends on the cost of construction. Now, we in our CA profession, with our curriculum of CA, we never have been taught how to make a building, how much steel is used, how much cement is used. We have never been taught, and we are not supposed to know that. So how do we vet this estimate? Okay, this particular building will require so much of steel, so much of cement, and it will cost 2,500 per square feet to construct. We do not know. It could be 3,000, it could be 2,000. We do not know. So then we have to go to an expert, maybe a civil engineer or somebody who can guide us and say that this is a certificate, that this is something which it will cost. There is another way of doing also. You need not every time go to the civil engineer. You can go for the past, whatever estimates the management has done. If their estimates in the past have proved to be accurate, suppose if they have estimated 3,000 rupees and the cost has come to 3,100 or 3,050 or 2,950, you can accept that these estimates are reliable. But suppose if they had estimated 3,000 and the cost came to 6,000, then you can't really rely on those estimates, because then estimates are guesstimates. So in that situation, then you will need a third party expert certificate, so that then you can rely more on that. So this is again what can go wrong. Accordingly, you plan your audit. So you then ask what you need based on what can go wrong. You have to eliminate management bias, because if the management bias comes into play, then there is always a possibility that the materials can be the financial statements can be misstated. Now, related party transactions, as I have already told you, related party transactions are prone to errors, because they can be colluded by, and the parties are their own parties, so they can always either increase the sales or reduce the cost, reduce the sales, whatever, to suit each other's requirement, and accordingly the financial statements are prepared. Now that means what is required as a bottom line is starting point. That is not correct. That is not allowed. That should be the result, not the starting point. Okay, then the related parties sit and together and discuss, okay, this is how we want it. That is not acceptable. This is where the auditor has to find out whether any such thing has happened in the financial statement. And if so, then those financial statements are not true and fair. Either it has to get corrected, or he has to give a qualified opinion. As I said, okay, again, it's a repetition using the work of an auditor as an expert. In several places in the tax audit, we have to rely on an auditor's, on an expert. And first thing, starting point itself, as I said, if we are only doing 3CA and there is another statutory auditor, then we are relying on that statutory auditor to give true and fair of that financial statement. We are not getting into the financial statement of true and fair. Then we only look at the 3CD aspect, true and correct. So our scope is restricted to that extent. But if we are doing 3CB, then even the true and fair aspect is the responsibility of the tax auditor. And he has to apply the entire standards applicable for giving true and fair, and including the accounting standards, everything. So again, when you are relying on an expert, you should also look at who are these experts. You cannot, they have to see their profile. You have to see their, whether they are capable of giving this level of opinion or that expertise. There should not be any person, anybody just signing some opinion and saying that this is correct or wrong. Because you are placing a reliance on that person. So whether he has got that ability and capacity to give that level of opinion is again important. And again, we will have to we have to refer this particular auditor's expert in our audit report. So our files will have to be very clear in speaking. And generally, many times when these experts give an opinion, there will be a lot of disclaimers. So you have to see whether these disclaimers are outweighing the entire opinion or no. Otherwise, that opinion has no meaning. For example, this gratuity, actual valuation. If you have read this gratuity's actual valuation, you will find that the gratuity has made it very clear that this report is not binding on them to the auditors. It's binding only on the management. So now you have to take a letter from the management that yes, they are conforming with this particular thing and they are agreeing to this thing. So then only you will get a comfort. Otherwise, how will you get comfort? Now, this is very interesting. This is the report format. The report format, which generally a 3CA, the standards on auditing has prescribed SS 700, forming an opinion and reporting on financial statement. They have prescribed certain format of reporting. Now, that is what we are using for our statutory audit, auditing and other matters. But as far as the tax audit is concerned, the income tax department has prescribed 3CA and 3CB. Now, if you look at 3CA and 3CB, when you are uploading online and when you are filing it online, you have no scope of modifying this 3CA or 3CB. You have to follow whatever format the government of income tax department, the government of India has prescribed. So, but we still have to comply with the standard. We are bound by institute's rules, and we are bound by the standard on auditing in the institute. So, how do we comply as well as comply even with the income tax department's format? So, what we have to do is what the income tax department has suggested. Sorry, what our institute has suggested, that you cannot change their format, but the format which is prescribed by our own institute, you should put it in the notes attached to informing part of this particular report. 3CA, you have got one more line saying that any observations, and you can say as per notes number so and so, and as per annexure number so and so. And in that, you can put in all those clauses which are prescribed by the institute, which you cannot put it into the 3CA or 3CB, like the management responsibility, the auditor's responsibility, how the audit was conducted as per the SA, and all that thing has to be incorporated in that particular notes, because we have to comply with SA as well as the 3CA, 3CB. Now, another thing which we also follow is that we should also have one set of printed. See, this 3CA, 3CB was all online file. But before that, we should have a signed copy of a 3CD by the management, because 3CD is never, you don't get a hard copy. You always do it online. So we should have a hard copy of that 3CD, including the reports, which as per the institute format, and that report should be duly signed. The 3CD should be signed by the management, and then we should sign the 3CA, 3CB, whichever is applicable, and then keep that as in our file as a record, because 3CD is to be prepared by the management, and the auditor is just giving his report on the 3CD. Now, what are the main formats for this particular thing? Is a title. Then we have got the addressing. Then we have got auditor's opinion, basis of opinion. Now, auditor's opinion is the starting point, whether it is true and fair or not true and fair, or adverse opinion. There are different kinds of opinion. One is called a qualified opinion. The second one is called an adverse opinion. The third one is a disclaimer of the opinion, and of course the first one is the normal opinion, where it's a clear opinion, which are without any qualification. Now, many times people make a mistake, and instead of adverse opinion, sometimes a qualified opinion is given. I will give you a very simple example. A person goes to a doctor, and he says, "Doctor, I want a certificate that I am healthy." Doctor examines him, and doctor finds that this man has got high BP, he has got diabetes, he has got cancer, he has got kidney failure, lots of problems. But subject to that, then he says, okay, subject to that, he is healthy. I feel the doctor should be examined. The point is, if so many qualifications are there, whether you can say that subject to that is helping, like your financial statement, if there are so many errors, which is all around, all round and all over the place, and there are significant ones, whether you can say this financial statement subject to all these qualifications are true and fair. No. Then you have to say that these statements of financial statements are not true and fair. You have to say, give an adverse opinion if the entire report is pervasive. I mean, all the errors are pervasive. It's all throughout. But if it is on one small area, like for example, some provision is not made, gratuity provision not made, or some items missed out, or some small items not, I mean, which is material. If it is not material, even that qualification is not required. But if it is material, but not pervasive, it is not all over the place. So what do you do? Then you give a qualified opinion saying that so and so, except that the financial statements are true and fair. So this is, I mean, when you're doing 3CB also, this is also very important because you are reporting on the true and fair of the recorder. So if you find that some provision is not made or something is that you are supposed to report this in the 3CB. And even if that particular thing is not true and fair, then you are supposed to say it is not true and fair. And then the 3CD will follow. 3CD is a separate report. It has nothing to do with the 3CB. 3CB may contain a clause about 3CD, whether it is true and correct, but that is a separate presentation. First presentation is your financial statement, that is a balance sheet, the statement of profit and loss, the schedules, etc. And then you come to the 3CB. So you will have to first report on the the financial statement if you are doing 3CB, and then on the 3CB. So now another thing is that other reporting responsibility, signature of the auditor is very important because now we have to do it online. So it is through our own online portal. We have to go through our own CA portal and sign this particular auditor, and then the company has to accept it. Sometimes one more important, interesting thing happens. When you are uploading this tax audit report, we have faced this problem in one case where when we uploaded that particular thing, that was to be checked by the management, by the company, by SSC, and probably whether they checked or not, what we don't know. They okayed it. So the form was filed. Later on, we realized that we had correctly prepared the form, but there was some system software error. While uploading, there was some error. Now, in that situation, we had to revise that. And that is something very serious because we must see before we upload, before we accept it, because then only if those errors can be rectified. Place of signature is very important, where you have signed, date of signature, because it should be, again, UDIN now is important. So you should be with that UDIN. Independent auditor's report. Now, what is independence? I want to spend a little time on this and then I will conclude right into the last part of my entire discussion. Independent auditor's report. Now, what is independent? As I mentioned to you earlier, that we say that we are all independent. Because we are practicing and we are not bound by any employment and we are not related to the associate, so we are independent. No. I'll give you an example. Suppose if your audit fees, let's say you have X amount of audit fees, and if your 60% of the audit fees is coming from one group, I'm not saying one company, one group of companies, can you say that you are independent? You are not independent. Because the moment you suppose that group, you have got one audit and you are signing some, you want to make a qualification, and that owner, that company will, or the assessee will tell you, no, please don't give qualification. Whether you can say, no, I will give qualification, otherwise, or you rectify, or either of these two, you do it. And if there is a pressure saying that if you do give qualification, we will remove you as an auditor, and still you say that, no, I will not accept to your pressure, then you are independent. Now, if your fees, 60% fees is coming from one client, how can you say that you will, how your mind is already into difficulty because your entire expenses, you have got overheads. So you are burdened with so much of thing. And now at this stage, when 60% of the fees are coming from one client, you are dependent on that client, and naturally your independence is not there. So that is the reason our institute also tells us that we should broad base our clientele so that we should not have dependence on one one client. So now there is a principle that up to 40% is considered good. Okay, you should not have more than 40%, but subsequently it is getting toned down to 15% shortly. That particular things are in pipeline. It may come later. Independence is a state of mind as to how you perform. Like, for example, when you go out to audit and you don't take favors from any client, that shows a state of mind. If you take favors, then it may take a small favor, but then you might have to return it with a larger favor. So that is again your independence is compromise. Opinion without influence. Independence in appearance. Avoidance of certain facts and circumstances. What we expected by the society is integrity, objectivity, professional skepticism, no conflict of interest, fair repose by the society, particularly income tax department. There should not be any financial interest in the organization. No loans or guarantees should be taken from that company. Professional leverage, I said 30% is allowed, but it will be brought down to around 15% later. Business relations should not be there. Potential of employment should not be there. Contingency fees we cannot take. Success fee. Okay, if you get this income tax assessment order in your favor, we will get this fee. No, it should not allow in an institute. Other assignments which are non-assurance based, we should not take up if we are doing audit assurance. Self-review. If you have given some opinion and you are only now going to review that as a part of your audit, which is again not right. Advocacy trade. You are dealing in shares. Your assignment for advocate in litigation matters. That is not allowed. Familiarity, too much closeness with the client, long association. That is the reason this rotation has come up. Acceptance of gift and hospitality, rotation of auditors is there. Internally also you should do a rotation among your own team or your audit partners so that there is a new line of thoughts. You should not be a financial advisor. Statutory auditor cannot be an internal auditor. Independence applies to each partner of the firm. Code of ethics, again, as I said, 15% now it is going to be. Now, what are the issues to be kept in mind? As I said, appointment letter is very important. This is a summing up of whatever we discussed. Section 115 JBA option exercise. There is one point in the 3CD that whether the company has, is eligible for 115 JBA. And there we are supposed to say whether the yes or no. And before we are confirming yes or no, we should see whether the form 10IB, 10IC and 10ID is filed or not. If it is not filed, then see, you cannot say that the company will file and then they will get, because you are saying it is exercise. Option is exercise. Option is exercise only by filing of the form. So subsequent filing will not help the books of account cloud based, as I mentioned to you. So where the books of accounts are kept. ICDS, I told you, Excel sheets. We should be, again, see, Excel should be again foolproof, because if they are able to modify that Excel sheets of the earlier working, then there will be no control. So you have to verify those Excel sheets vis-a-vis the working is done in those years and how it was reported in your ICDS. Then only you can match. Otherwise, there could be some modification and you are in trouble. Clause 21B, which talks about disallowance under 40A, should be cross-verified with the clause 34A, where there is some discrepancy. Both should match. Otherwise, somewhere you show discrepancy in 34A, but not showing as a disallowance under 21B, then you are in trouble, because you are in one thing, 3CD only, there is a discrepancy and you have not reported. So that is a major error. 15CA, 15CB, again, relying on an expert. Suppose if the assessee is obtaining 15CA, 15CB from certain another chartered accountant for 195 payments, whether TDS is applicable or not applicable. They say not applicable. And now you are relying on that. Yes, as an expert, you are on an expert, but the opinion which is given is correct or not. GAR, clause 30C, because that GAR is a very, very wide term, very difficult to identify. So there are some disclaimers to be given, whether you can apply mine on GAR or no. That again is important. As I mentioned to you, disclaimers for pays account checks, because you have no evidence to see whether pays account checks have been issued. Deemed dividend, again, is a very serious matter. Deemed dividend, when the company has given loans to anybody, you can find out deemed dividend. But if there is two different entities giving loan, but that also becomes deemed dividend in the hands, how will you know? So you have to take a management representation, and again disclaimer in the notes to accounts, notes to the 3CD. Now, this is the last but not least, follow standards on audit. Documentation, what is not documentation is not done. Be alert, check and read any material on which reliance is placed. Document memorandum of dispute, which I mentioned to you. Maintain independence, compliance with accounting standards, else face NAFRA or disciplinary action, class action suits, or serious fraud investigation office, or even income tax department now will initiate action against the member. Now there is section 278 also is there under the Income Tax Act. So there also is a very severe responsibility for a chartered accountant. Then there is a 195 payment to reconcile with notes to accounts, forex payments, because there should not be any contradiction there. GST working clause 44, because now it has become applicable. So whether the company has the record or data for you to verify. If they don't have, then you say it is not possible. Loans received and repaid 269 SS, reconcile with accounts. What we generally do is start with the opening balance, add receipts and less payments, and then the closing balance. Opening balance should match with the financial statement of the last year, and the closing balance should match with the financial statement of the current year, so that nothing is missed out. Otherwise, you only take receipts and payments. Some items might be missed out. So then there are chances of what can go wrong. 3CA, we already discussed, relying on this. Balance of input credit. In one clause, there is a balance of input credit. You should match with the financial statement, whether the input credit figure is matching what they are showing in the financial statement. Proper notes to be given, wherever disclaimers or whatever on what basis you have taken the view, you should mention that. I think I've come to the end of my presentation. If there are any questions, I'll be happy to take it.
Sai, sir?
Yes, sir. Yes,
Sir, we have shared some of the questions which the participants had shared over your WhatsApp, sir. In case if you can kindly take some of one or two more questions, sir.
Sure.
Whatever you think relevant and which has not been covered in your presentation, sir.
I will just check it out. Yeah, there are some questions. So I'll just read out the question and then I'll try to answer. What specific standards of practice needs to be considered in tax audit? I think as far as the tax audit is concerned, as I mentioned, there are certain relevant standards of audit which has been prescribed by the institute. I mean, if you're talking about standards of practice is very simple. You follow the standards on auditing and compliance with the institute's rules and regulations, whatever ethical norms and independent norms, and checklist documentation, which is very important, which I've already discussed during this 2 hours time. And if you follow that, I believe you would be safe in doing your work. And of course, tax audit is a very strenuous work because it requires reporting of facts and figures. And as I said, true and correct. So yeah, accuracy levels have to be very high. And we have to ensure that the level of staff and person who are working are of that level. We should have our own tools, auditing tools also, which will guide you in doing this audit, particularly this ICDS and other things which require very precise working. Okay, now let me see another question. Whether we have to write in points 3, 5 in 3CA, 3CB auditors' responsibility. Yes, this is what I mentioned to you. We cannot write in the 3CA, 3CB, but we in the other points, there is an observation. There you can say you can mention all this, or you can give it in the annexure. That is also allowed because annexure is a part of the 3CA or 3CB. And you have to say in that 3CA, 3CB that refer annexure, so and so for observations and for notes. And in that you can mention all these responsibilities, which is even prescribed by our institute. Yeah, will tax audit of non-corporate entities cover audit trail from 20 to 23? This audit trail point has come up under the Companies Act. So, but still, I would suggest you should look at this audit trail, because audit trail is very important from the perspective of any verification which is happening in the financial statement after you are auditing, and that is a risk factor. So you must, as a part of your control system, you must ensure that there is no deviation from that thing. But this is mainly for the Corporate Companies Act. While doing tax audit of the assessee, should we have to consider the concept of materiality or no? As I mentioned earlier, when you are doing true and fair financial statements, materiality is definitely important, because when you are looking at the sampling or when you're doing audit, you can look at material items. And even your report is on a material basis, on your true and fair is on a material basis. But when you're doing 3CD, there is no concept of materiality, because each and every, like for example, loans, you cannot say I will miss out some loan which are not material. Suppose, for example, the assessee has got 5 crores of loan, various parties, and there could be one party of 1 lakh rupees. You can say, oh, I missed out at 1 lakh. No. You are supposed to report each and every item because it is true and correct. You cannot say that I missed out 1 lakh because it is not material. No. That materiality will not apply in 3C. In 3C A or, in your financial statements, true and fair, yes, it's possible. And 1 minute. Kindly message to speaker that 2,000 people hours already joined. Okay. I'm being informed that 2,000 people have viewed this, and I'm really thankful that all our 2,000 members have taken out time to hear this. I'm grateful to them for hearing me patiently for 2 hours. So it's a great thing for me. If individual proprietorship client adopts mercantile system for one business and cash basis for another, how to? Yeah, it's very simple. See, when you are auditing in the tax audit, you have to mention the various firms or divisions which you are auditing. Suppose, for example, it has got 2 proprietary concerns. So 2 proprietary concerns you mention, and whatever, see, each one can have its own method of accounting. You have to mention that. So that is what you have to specify. What is cash system, or and it is allowed. If it is non-corporate, it is allowed. If it is a corporate, then there is no question of cash system, because we have to follow our approval system. How to deal with quantification of inventory when the assessee informs he cannot maintain quantity record due to nature of the market. That is not the acceptable thing. Sometimes it happens that, for example, there's a trader and he's having such a wide range of inventories. But then what is the materiality of inventory in his books? As far as the true and fairness is concerned, we have to examine. If the inventory is material, then we cannot, we have to qualify. Okay, it is inventory records are not maintained, or because it will have an impact on the P&L. And as far as the 3CD is, since it is qualified in the 3CB itself, then as far as wherever that inventory is mentioned, you have to mention this case inventory is not properly maintained. Whether new formats for financial statements under the tax suggested last year mandatory are. No, see, it is going to become mandatory shortly. They have March. The institute has come out with guidance, with a exposure draft. But I would suggest you start following it, because it is going to come in very shortly. So it will become mandatory. Whether the intimation of appointment and previous auditor by email, no. As I mentioned to you, by registered post. If you receive NOC, then all that, whether you send it by registered post or not, really doesn't matter. But suppose, for example, you have sent it by email and you don't receive it within 15 days and you continue to audit, assuming that reasonable time has been given to that auditor, and he has not responded, so it is considered as an acceptance, then you are in big trouble. Then it could be a disciplinary issue. If client not coordinate confirmation procedures, yes, I mentioned to you, if you can do an alternative procedure to find out whether these balances are correct, then it's fine. But if it cannot, and you cannot really find out whether these balances are correct, then a qualification is possible. Definitely, if it is in a 3CB also, because true and fairness is important. I think that's all as far as the questions are concerned.
Thanks a lot, Kusai sir, for your wonderful presentation. I will request Chandrakant Kale sir, he is a member of the institute, to kindly give a formal vote of thanks to you, sir.
Yeah,
Over to you, Chandrakant sir.
Yes, madam. Thank you, Anita madam, for giving me this opportunity to close this session. First, I would like to thank CA Kusai Goawala for giving his valuable time and spending a lot of time and efforts for explaining us the importance of tax audit as far as our chartered accountants are concerned. One thing which has attracted me in his this presentation was least but not either else, and that else is creating a lot of problems, and therefore from that point of view the institute has also thought that we should have an expert like CA Kusai sir to explain us the integrities and the minute details about the tax audit and the precautions that we have to take while attesting our function. And I would really would like to thank on behalf of all of our fellow members that the way he has explained, and always he has explained in various lectures in which I have attended, but today I could say he could see me face to face, but then I am always a good listener to his lectures. And he has always given a good and well detailed presentations. And I hope with his lecture, all VFOs has gained in-depth knowledge, not in-depth, but some knowledge and some idea that how we should conduct the tax audit in a better way and to avoid all the problems that our fraternity is facing today when it comes from the regulatory authorities. And they question us, and then we come into a big trouble. So once again, on behalf of all of us who are attending this webcast, I thank once again Kusai Goawala for giving his valuable time. And on behalf of the institute also, sir, we would like to thank you. And I would like to request that we will have many more sessions with him in future also, so that we will be enriched with the knowledge that he possesses and the experience that he carries over a period of time that he has been with the institute. With this, I would like to once again thank you, sir. And I also thank Anita madam for giving me this opportunity to give this vote of thanks at this moment. Thank you, madam.
Thank you very much, Chandrakant sir. Thanks, Kusai sir.
Thank
you,
you,
sir.
Thanks for inviting.